Would you say that the economy has bounced back after this first wave of the pandemic?
Yeah, to a certain extent, yeah. If you look at what the second trimester quarter gave, actually in the US, if you took it on a yearly base, there was really a collapse of 32.9% of the economy. And what we've seen in the third quarter is a certain, you could call it, bounce back, in the sense that the US economy went up by 7%. The German economy did about the same, 8%. And if you look at the UK, the economy went back up with 16%, or in France with 18%. And so it's logic. At that moment, the general idea that started to grow was we're going to have a V recession. But of course, we have to see it against the background of the reality, because even then, the figures for the UK on a yearly base still predicted a collapse of the economy of 11%, and that's not gone away. And the same happened in India, where there was a collapse of 7.5% for this year. So in reality, the overall figures, even during that period, that was before the second wave of the pandemic, the IMF was predicting a collapse of the world economy by 4.4%, and the OECD 4.2%. It was about the same element that they had. Now you have to see that in the context. What we said in the previous article was that all the existing problems that existed long before the pandemic was actually more like a trigger of a depression that was already announcing itself, that all those existing problems, they were still present. The first thing is productivity. Productivity is historically low. Even during the 90s and the 2000s, it was already low, but since the Great Recession of 2008, 2009, it is back to about 1%. And it's not based on innovation. It is based purely on what they call physical capital, meaning buildings, machinery, and so on. Also, the level of inequality has only become bigger. And maybe later on I can go into a bit more detail on that. If you look at another problem that existed, the debt trap, already it's a problem, a major problem for China. It explains why, for the moment, the kind of intervention in China is not of the level of 2008, 2009, which is an exception. And it is because at this stage, the total debt of China is over 300% of GDP. It's impossible to repeat the same intervention as they did earlier on. But in the rest of the world, you do have much, much bigger interventions. But there is a reason for it. The reason why the Fed, for example, released so much money in the economy, reduced further its interest rate, started campaigns on quantitative easing and so on at a level we haven't seen before, is because they were afraid that they would end up in a financial crisis with a series of bankruptcies, and that would entrain an even bigger depression as the one we have at this stage. Look at the world trade. The world trade was already retreating. In 1984, world trade stood at total export and import on a world level was about 19% of GDP. By 2008, it was 31%. But even in 2019, it was down to 26%. And now for this year, there will be a collapse in world trade of another 10% that will be produced. Same thing over the formation of capital. If you look at it, at the time in 2008, the capital going over the borders represented about 40% of world GDP. By 2019, it was reduced to 20%. Look at the financialization of the economy. In 2008, it was about $816 billion. Now it is $630 billion. So you saw that the retreat was already ongoing in the last period. And now, of course, with the new wave of the pandemic, it's a total disaster. For January, it's expected that the US will go again in a recession. In Japan, they try to avoid that by launching another stimulus plan. And even in Europe, a month ago, they thought that the fourth quarter would be a growth quarter. Now it is expected that the European Union, the Eurozone, will have a further reduction of the economy of 2.3%. So yes, there was an element of an illusion in a bounce back on the basis of the figures that you had in the third quarter, but these were actually only a kind of, the economy stood in a standstill. And then when they restart, automatically the figures are relatively big. But if you compare to the collapse of the economy that you had before, it's of course very limited. So all the problems that existed before have become worse. The economy is not going to have a quick, it will not be a V-shaped depression that we had. It will even not be a double dip. There is the chief economist of the World Bank who explicitly says, of the IMF, sorry, who explicitly says that the period of recovery that will be following this crisis will be long, will be uneven, and will be very uncertain.